Good morning, everybody. Hey, welcome to the WCPT 820 Real Estate Radio pre-show. Tomorrow, we're going to be on live at 9 o'clock in the morning, 9 till 10. I'm going to let Dylan in here right now. Dylan, are you with us? There he is.
Going on, Mr. Man?
Dylan, the man of the hour. We are benchmark. We are benchmark strong.
You got it.
How you doing, man?
I'm good. I am good.
Awesome. Yeah. So you just got back from a nice, relaxing 2-week East Coast vacation.
You know what? I'm going to tell you, it was all of that, but it took me all of this week to catch up in my life on everything. Yeah. It's crazy. I don't need. And you know, we had the first few days of back to school for my youngest. We had a bunch of stuff going on here at work. You know, I'm trying to get some exercise in, and all of a sudden I realized today I haven't been back to the grocery store since I got in town.
Yeah. Yeah. It's really, you come back from vacation, you need a vacation from your vacation.
Exactly right.
So how's biz? How's things going?
You know what? It's been an interesting week here in the mortgage business, and I'll tell you a couple of things. So we're busy with a lot of transactional stuff on the things that are getting under contract, but two other things that I think are interesting and of note. The first one is it's just quiet this week where people are all I'm not the only household that has back to school on the agenda.
Oh yeah.
Right? Yeah. And so people are really busy and are just like, you know what, I'll get to it next week. Right. And I get that. And so that's part of what's out there in the world. But the other thing is that we've had a really interesting time in the mortgage rate space. I know we talk about that every week on the show. Rates have gone up and touched the highest levels since October. They're back at the October highs, right?
And where are we at right now? About 7.2, 7.3?
Like 7.6, 7.7. So, I mean, so the thing is that we really are at this inflection point where either we're going to kind of back off and go back towards 7%, or rates are going to shoot through the roof from here. And if I knew which, I wouldn't do this job for a living, right? Yeah, but it really, and by shoot through the roof, I mean 8.5, 9, totally in the cards. Like the multi-decade lows could get wiped out today, tomorrow, whatever. So we're keeping a close eye on that. And like I said, I'm not really doomsaying because I don't know what can happen. But when you look at these trading charts, it's in play.
Yeah.
But also so is a return to 6. So who knows?
Who knows? Yeah. I mean, it's impossible, absolutely impossible to predict. And we all know that because all we have to do is look in our rear view mirror at 2020. No one predicted that. Hey, before we go any further, I just want to remind everybody that tomorrow we're on live from the studio, WCPT 820 at AM at 9 o'clock till 10 o'clock. And this is news to you, but we have a guest on the show tomorrow that's going to be calling in at 9:30, Tom Jurek with Chicagoland Soft Wash. And it's a really cool process. You know how you power wash your deck and it's like, you know, like insane. It's like a fire hose. Well, this is the exact opposite. It almost like sloughs off all of the grime from your roof, from your house, and it's done in a very gentle manner so as not to, damage anything. Because you can damage your deck with that high power.
I'm interested to learn a little bit more about this because, frankly, my deck's a mess, Larry. I won't lie.
This might be an option for you, but. Right. Yeah, he's going to be joining us at 9:30, and I'm looking forward to it. And tomorrow we'll be talking about, a lot about what we just touched on, rates, but we'll also be talking about inventory because, dude, I mean, inventory is just insane where we're at right now. Right. It's crazy. There's just not a lot of properties on the market.
Yeah, you know what, Larry, I think that it's interesting. One of the things I'm working on, and I actually, it's a great segue. And if you like this, we can dig deeper tomorrow. But I've had a pretty deep conversation with a potential client today, because so many people gone to the sidelines, right, and said as buyers, hey, I'm not going to buy that next place, whether it's or my first place, but also my next place. Largely because I have this 2.5% mortgage over here at this low rate, right? 3, whatever. So I have a buyer who has to move. And what I mean by that is he's 30, young family. They have a toddler and one on the way. They bought their first house 3 years ago, right? So they have a 3.5% mortgage. But he came to me and he's like, I was thinking this, and I've been saying this to people on an ongoing basis, but I think that it might be a thing to do some digging on. He's like, how can I keep my 2.5, 2.75% mortgage working for me? And so he has the capacity to put 5% down on his next place. And we did the math, and in essence, it's going to cost him in an extra rate about $1,200 a month to get that next house. However, he can rent his existing house with the lower payment for about $850 more than the current place, or than the current payment. So he's like, am I thinking, am I wrong here that I could just take the $850 extra in rent and use it to offset the 12.5 or 1,300 on the next place? And the answer is, of course, no, you can. Absolutely. Right. Like that's how that works. And so he's going to convert his place into a rental, and then the move to the bigger house, which has to happen, right, because they have a growing family and not enough space, is going to only cost him $500 a month, not $2,000.
So this is interesting. So he does not need the proceeds from the sale of the house he's living in to buy his next house.
Correct. Doesn't need. Not mandatory. Obviously better because it's about $80,000.
But he could still put 5%.
But he could still put 5% down on the next place
and rent his current place.
Yeah. So I can strip out, if you're interested, I can strip out his personal information and we can talk about it.
We'll do that tomorrow. Let's do that tomorrow, because that is a really, really good point. Because, you know, the only thing that has gone up higher than the cost, the cost to purchase a home is the cost to rent a home. And, you know, we talk about this every week, that real estate has to remain affordable. It has to. So it's great for investors. It's great for, you know, people renting their homes, that they can get more in rent, but we can't price the masses out of that rental market. At the same time, it's a great, great opportunity for, you know, a seller buyer like you're talking about to rent their current house and be able to move into that next forever home, if you will, or that next move up space.
Well, the other thing I like, Larry, a lot about this conversation, and he's not the only one, but he's the one this week that I went deep on it. And it's a great example. It's really, really a home run. But the thing is, we talk every week a lot about rates, right? Because everybody's talking about rates. But I feel like sometimes we end up talking about, wow, rates are up, rates are a problem. This is it. Like now let's spend some time going deep tomorrow. And certainly we're talking about it a little bit here too. But the idea that we're not just talking about, oh my God, the sky's falling, rates are going up. Like, here's an answer. Here's a solution for a rising rate environment for the right clients. And I would bet more clients than not could make this work for them.
Yeah, no, absolutely. And it's really a great option. I mean, you know, now you have it may or may not be your first investment property, your former primary home, because now you're renting that, because you're still building equity on that when you're renting it.
Absolutely. I mean, it's almost, you know, we talked on one of the previous shows before I went on vacation when I was in the studio. we spent a lot of time talking about house hacking. It might have been actually the first time we got together on the air live. And the thing is that this is effectively kind of late in the game converting to a house hack, right? Like, I bought this place, I was going to live there, I thought I was going to be a traditional owner, but with this change in market conditions can come a change with your real estate agenda for a specific piece of property. And the way that this client said it to me, and I love it, and I'm going to use it going forward, I'm going to share it with you now, is he's like, if I call the bank and sell my house and pay off my 2.5% mortgage, it's their asset, right? Because they get the money back and they're going to put it back out in the market at 7 or 8 or whatever. They have to take it from me at 2 3/4. He's like, so it's my asset. I should keep it and figure out how to make it work for me. And at the end of the day, if you can deploy the money in a 7% market, it doesn't matter whether it's 7 1/4 or 7.5 or 6 3. If you can deploy money, in his case, almost $200,000 on the mortgage, and deploy it in a 7% market and earn a return, when you're owing the money at 2.5, like, that's real money. That's 4.5 or 5%.
Yeah, that's crazy.
5% on 200 grand is 10 grand a year, or about $800 a month. And guess what we just talked about, right? So like, if you penciled out the math, you'd earn that percentage, which is in essence the actual dollars he can take from house A to make the payment on house B.
Yeah.
So I think it's really powerful. So I'll work some stuff up. I'll have a sheet tomorrow. We'll talk.
Let's definitely talk about that, because that is a great option for people that want to move up, or possibly even move down, that are, somebody that's all their kids have moved out. They're ready to get that townhome and they don't need the 5,000 square foot home anymore. They can rent that home, which you can get a pretty penny for right now, depending on where you're at.
Larry, I know you live in Naperville, right? So let's envelope out some Naperville math, right? If I was raising my family and I was done with high school and I didn't need the big house that I raised multiple kids in, and that payment's probably at 3%, given taxes and loan sizes in that area, it's probably a $3,000 a month payment just for a reasonably big house, right? Not, you have 4 bedrooms, 2.5 bath, 3,000 square feet, right? 2.5, 3-car garage type of place. If you could rent that place out for probably 4 and put that $1,000 a month in your pocket. And then if you went and downsized to a place that was, a $250,000 condo, a $300,000 condo, and that was going to cost you again $3,000 a month. Well, now it costs you 2.
Here, I'll give you an example. We just rented a place that's a little over 5,000 square feet in West Chicago, a really, a nice property, really awesome looking property, for $5,600.
Oh my, yeah, no, rents are crazy.
Rents are crazy. And, that gets back to, this is all great, but we still have to keep housing affordable. It is, no pun intended, the benchmark, the cornerstone of our economy is our real estate market. And I'll say that until the day I die. If our real estate market isn't strong, and hopefully that's not soon, if our real estate market isn't strong, it's going to have a negative effect on our overall economic outlook.
Absolutely. There's no question about it. It's critical, but I think that what we're getting at, Larry, both in terms of what you're bringing up on the absolute size of rents, and what I'm bringing up in terms of this client and his potential to convert this place to a rental property, is because we've had a market that is, I don't want to say it's unprecedented, because if you go back 50 years, it's probably precedented, but it's certainly not something that we've dealt with in our careers. And our careers are not short at this point, right? We've both been doing this for 25, 30 years. It's a real thing.
Yeah.
But the thing is that now we have to think differently, because we have a really different market. And so I applaud this customer for doing that. But given the change in rent levels and given the locked in cost of money, I think it's two ends of the same coin, or whatever analogy you want. We're really getting to the same heart of the matter, which is this different market requires people to do things a little bit differently.
Yeah, you got to shift your sails to the wind,
Right.
whatever's going on in that
For sure.
market. You've got to make changes. Hey, before we go any further, I just want to let everybody know right now we're live on YouTube and we're live on TikTok. And I just want to let everybody know, tune in tomorrow at 9 a.m. If you're in Chicago, if you're in the Chicago metro area, you can tune in to Real Estate Radio with me and Dylan and our guests every Saturday, 9 to 10 a.m. on 8:20 a.m. if you're within that listening radius, which is all of Chicago metro and gets into a little bit of Indiana, Michigan, Wisconsin as well. And we are sponsored every week. All of our segments are sponsored by Benchmark Mortgage, of course, and the pit bull of a mortgage industry, Dylan Kramer. I had to say that. Patrick cracked me up, man. That was amazing.
Yeah, it was pretty good.
Benchmark is one of our great sponsors. So is TrustedAgentUSA.com. You can go there and save a ton of money when you buy, sell, or invest. For instance, buyers get back up to 0.5% to use towards their closing costs and prepaids. So if you're buying a $500,000 home, you're getting $2,500 to put towards your closing and prepaids, plus a 1-year home warranty to give you some peace of mind.
Back to the idea of doing things differently, right?
Yeah, you got to offer that value. There's got to be a good value proposition.
Right.
Get it out. I'll get it out. And then sellers as well with Trusted Agent USA. If we bring the buyer to the market, it's a total of a 2% listing commission. So you're literally saving more than 50% on what you would literally list your property for. That's if we bring the buyer. Otherwise, it's, you still would need to pay the buyer's agent. So, and then of course, at-home title services, where if you're a real estate broker in Illinois, you have to check this out. Go to TrustedAgentUSA.com and click on our partners, excuse me, click on our partners, and then click on at-home title services banner and check out how to become a registered title agent. Because bottom line is, everything is compressed now, right? Commissions, inventory, business, it's much more competitive now. So anything you can do to offer your sellers more services while also improving your bottom line, that's a win-win for everybody. So I just want to thank all those people. And hey, I'm going to share my screen real quick here because I want to show, and hopefully technology works here. I want to show what we're looking at in terms of inventory right now. So give me a second here and let me see if we can do this. I think I'm going to have to go here first. Okay, so that is one thing, and let's go here and see. All right, I don't know that this is going to work out, but I wanted to show the inventory in Naperville right now.
Okay.
Because the inventory in Naperville, can you see my screen right now?
I sure can. Yeah.
Okay, so
it's your real estate therapist page.
There it is. Is it the Trusted Agent USA page?
Yeah.
Okay, so this is Trusted Agent USA, guys. This is where you can go to save, whether you're buying, selling, or investing. That's not why I'm coming here, but if you do want to check out Dylan and see exactly, how to get in touch with him, just go to our partners page, click on that. You're going to go right to Benchmark Mortgage, and you're going to be able to hook up with Dylan, get a pre-approval and a great experience when you are buying, selling, or investing. And you work with investors too, correct?
Absolutely.
Yeah. So let me do this. I'm going to go to, I want to go real quick to the MLS. Let's just go live on the MLS right now. And let me know if you're still looking at my screen.
I sure am.
Okay. So we are now, I'm going to do a search, a general search. This is just detached properties is all this is. So this is detached properties. And let's do this, general search, detached properties. And let's just look in Naperville. Okay. So in Naperville right now, it's showing 318 matches.
Right.
But that includes properties that are under contract already, right? So
Right.
we're going to take those out altogether. And we're going to take out temporarily not showing because we don't know what's going on with those. But we'll leave everything else in, and we'll even put auctions in. So
Okay.
anything that's on the market right now that's active and that is even active on the private listing network, we're going to see here right now.
Okay.
So what we're looking at is 228 properties that are currently either on the market or coming on the market.
Right.
That's not a lot.
No, I mean, how many people are in Naperville? 65,000? Big's the town?
Add a one before that and you're
Okay.
closer.
All right.
It's about 150,000.
All right. So yeah, I mean, at 150,000 people, the reality is, right, 228 houses might be housing for 1,000 people, right, or less than 1%. So it's like less than 1% of the necessary housing stock, right? If you're just going to extrapolate that math, which I always end up doing the math in my head, Larry. That's part of what I do.
That's why you're on. So yeah, I mean, really, we have about a month of inventory on the market, and really anywhere you go, wherever you're at, whatever county you're in, many states you're in, it doesn't matter. You know, people could be watching us now on TikTok or YouTube from many other states, and it's the same inventory issue wherever you go, typically.
Yeah, I get that.
So in Naperville, so the properties that are on the market now range from $299,
Right, which I'm sure is the smallest house on a busy street, right?
It might be a lot. So yeah, so this is a property on Main Street for $299. It's been on the market 11 days and it's listed by Cookie Hansen of Century 21. And so, yeah, I mean, this is your typical 2-bedroom, I'm going to say 1 bath. It's a 2-bedroom, 1 bath house for $300,000. That's what you're getting now for $300,000. Remember back in the day, a few years ago, $300,000 could get you a 3-bedroom, 2-bath house that needs a little work.
Yeah, for sure.
That's not the case anymore. But at the other end of that spectrum, and like we said, there's 228 houses on the market, right? But that includes, if you see here, private active. That means it's active in the private listing network.
Right.
So these properties that you see private active status, those are not on the market yet. So all of those are coming on the market, not on the market yet.
Right.
But many of those, because of our lack of inventory, I just sold one like this in Homer Glen, will sell before they ever hit the market.
Right.
So that's why it's important for buyers and sellers out there to work with real estate brokers that they know, like, and trust, and know how to maneuver through this crazy market, because you could miss your dream home that sells on the private listing network before it ever hits the market. And it happens all the time.
Right. I get that.
Yeah. So
I get that.
Right.
Hey, I got a thing for you. If you want to drop your screen, I'll share mine. And
yeah,
I want to show you this chart because it's impossible to do when we're on the radio.
Give me 1 second because I want to show the other.
Yeah. Show me one more thing. But before we head out today, I want to show you one thing on my end.
Yeah, we'll do that right away. Before we go to your stats there and what you want to show us, I want to just show the other end of this. So this is a property that is listed by, I believe this is listed by Michael. So this is a property that's listed by my partner over at eXp Realty.
Right.
And this is on Donwood in Naperville. This is listed by Michael LaFido, eXp Realty. Me and Michael do a lot of business together. And just to give you an idea, this property that's listed at 5 million plus, we're looking at, one of these properties.
Wow. Yeah. I mean, it looks fantastic.
Yeah, no, it's an amazing, amazing property. But the point is that pricing is going to run the whole gamut. But the reality of it is there's just not a lot of houses on the market
Right.
in that bread and butter range. Bread and butter right now is what is like 450.
Yeah, I was going to say 500, but
All right, I'm going to stop sharing my screen right now.
Cool. I'm going to bring mine up. Hold on. Oh, it says host disabled participant screen sharing.
Hang on, let me see if I could multiple participants can share. So you should be able to share it now. There
we go. All right, cool. All right, so I'm going to share this. It's a trading chart. Can you see it?
Mm-hmm.
So this is a website we use to advise folks on when the best advantage is to lock their rates, right? I make the joke, I don't really know when to lock rates if I was a bond trader. These guys are traders. So they follow this candlestick charting, technical analysis stuff, and it works pretty effectively. Right. So you can see here, every one of these bars is a day. This one is today, yesterday, going back Wednesday, Tuesday, last week. Like, rates have been on a downslide literally since the middle of July, right? I mean, which is when we started talking about rates really kind of bumping from 7%-ish up to where they're at now. So they've been grinding higher over the course of the last few weeks. The thing I want to show is if we go out and we take this same chart out to a year, it'll be way smaller. But the thing that you can see is this is when rates were at their highs last fall. Okay. October, November. And here we are now. So we turned around and got better into January, March, right? Decent spring market in the high sixes, et cetera, et cetera. And then we've seen this return down here. So when I mentioned earlier that, hey, things either have to start to come back this way, right? And moderate back towards 7% and potentially better, right? Probably no better than here in the medium run. But ultimately, if this breaks down and rates fall here, the next chart, which is an infinite chart, they don't have it on this site, takes us all the way into like this area in the 8.5s. So we're keeping a close eye on this all the time, but I guess I just wanted to share it because it's like, hey, I don't make this stuff up, Larry. Like, no, we pay these guys to keep an eye on it for us. And they're far more expert at the rate trend. They normally will tell us, hey, we got an opinion, right? Rates are going to bounce back. Rates are going to do. They think it's probable that we improve from here and rates moderate back towards 7, 6.5. But not so confident in it that they're like, oh yeah, do that. Tell people lower rates are coming, right? We've talked a lot about, even a year ago, we were like, oh, marry the house and date the rate. Well, you know what? You're stuck in that relationship with 6.5. When you thought you might be, you just be in a fling with 6.5 and move into the 5s, right? So it doesn't mean that you won't get a chance to turn around and refinance eventually. I think ultimately lower rates are going to happen.
Absolutely.
But I don't know that that's a thing for the next 90 or 120 days, right? It's a 2024 thing, not a 2023 thing at this point.
Absolutely. Yeah. I'm not looking to.
But that's the why.
Yeah. And I think that is the linchpin as to why we have such low inventory on the market right now, and which is holding prices up. Prices are not going down, not with this inventory level. Supply and demand is everything. I don't care what market you're in. That includes the real estate market.
Yeah, no, and look, the demand thing is going to stay this way, because even the strategy we talked about earlier, the idea of converting your existing place to a rental, doesn't put inventory on the market. It puts housing on the market, right, for a rental, but it doesn't put that unit on for sale.
Yeah.
But that doesn't mean it might not be the best move for the customer.
Yeah, no, that's something we definitely want to talk about tomorrow. So I'm going to remind everybody one more time before we take off here. Join us tomorrow. Dylan's bringing the donuts.
Sure.
9 o'clock. Don't bring any donuts. 9 o'clock in the morning until 10, 9 till 10, Real Estate Radio, WCPT 820 AM in the Chicago market. But you can also join us on Facebook at WCPT 820. You can join us on YouTube, and you can join us on TikTok as well. So yeah, you guys tune in tomorrow. We have a great guest, Tom Jurek with Chicagoland Soft Wash. He's going to show you exactly how to make your house literally look brand new, or your deck. Dylan,
I'm looking forward to hearing
it too, believe it.
All right, man, we'll see you bright and early tomorrow.
Okay, bud, awesome talking to you.
Likewise. All right, looking forward to it. Thanks, Larry.
Yeah, I'll see you.
Yep, bye.
All right, everybody, that was Dylan Kramer with Benchmark Mortgage, and I hope you enjoyed some of that information. Dylan is a great guy. He joins us every week to give us some of the lowdown on what's going on in that lending landscape. And as we could see today, there's a lot going on. So tune in tomorrow. We're going to talk a lot more about it. And remember, if you want to save a ton of money when you're buying, selling, or investing, go to Trusted Agent USA, click on any of these links here, and save yourself a ton of money. Like I said, if you're a buyer, you're going to get up to 0.5% back to put towards your closing costs. If you're a buyer, you're going to get a free 1-year home warranty to give you some peace of mind when you buy that next home. And if you're a seller, you're going to get your home listed for as low as 1.5% if you're buying your next property with us. And if you're not, then the listing commission is 2%. And of course, then it's up to you what you want to pay that buyer agency commission. And typically that's, somewhere around 2.5% in Illinois. I know, people can be watching from other states, other areas. All real estate is local, so it's different everywhere. So tomorrow, tune in on YouTube, on TikTok, on Facebook at WCPT 820. And if you're in the Chicago market, you can listen on the AM radio, 820 AM. I hope AM is around in the next 10 years. They are literally already lobbying car manufacturers to keep AM radio in cars, in new cars when they're delivered. So, nobody listens to music anymore on the radio. It's all streamed. And so there's that whole battle going on right now. Anyway, you guys, I'm going to stop sharing my screen right now. Give me a second here. You guys be sure to tune in tomorrow, 8:20 a.m. WCPT out of Chicago, 8:20 a.m. on the dial, WCPT 820 on Facebook. We're also on TikTok at the Real Estate Therapist _. You guys like and follow me, and you'll be notified when we come on live. And YouTube as well. Like and follow this station, and let's get you guys involved in real estate radio on Saturdays. All right, you guys, love you. Take care. And we will see you tomorrow at 9 a.m.